Hello everyone, in this video I'll cover Apple, the Wall Street's darling stock, whether you should buy or sell in 2023. I will go over the Apple Fundamentals 2023 bear market targets as well as some charts and technical analysis. Welcome to Take It Easy Trading, your channel to get some stock market, macroeconomics, and some stock chart analysis trading tips. If you find value in my videos, please subscribe, like, and share it with your friends. Let's begin. Topics will cover Apple performance, fundamental review, earnings estimates for next 2 years, and what is a fair price based on the forward PE and also the PEG, and some chart analysis. Let's look at the stock performance. Apple closed on 12/28 at 126. It made a new 52-week low at 125.87. In the last 5 trading days, Apple is down almost minus 4.73%. Why Apple has been going down for the past few months? Similar to Tesla, it also has a supply chain for producing various models of iPhone 14 and 14 Pro Max. And the customers are unusually facing long delays before they could expect to receive their phones. I ordered two 14 Pros and it took a month for them to arrive. Also, Apple started to face the weakening macroeconomic conditions. And going forward, Apple could see a bigger sales slump that could also weigh on its growth and profits in 2023. Apple had somewhat been impervious to the decline in the other high-tech stocks, but recently in last 2 months, it also gave up and had a huge drawdown of almost 30% in last 3 months. As you can see in this, in the last 1 month, Apple is down 12%, and last 3 months, it's down 15%, and for the year, it's down almost 30%. Now let's look at Apple fundamentals. Apple has a market cap of 2 trillion. It has annual sales of roughly $400 billion and the annual net income is 100 billion. It has been a cash cow for many years. The short volume ratio is 0.40 and mostly held by many institutions in many of the ETFs that we all own. Some key points of Apple: very high revenues, and most of the revenues are dependent on iPhone. It has 52% of the Apple revenues. So there is also a risk because of just dependent on the iPhone. And the stock is also trading at 21 times the trailing earnings. So it is kind of not too high and not too low either. And let's look at some insider selling in Apple. Mainly the CFO has been selling, not so much, a couple of times this year. And then I had to really dig deep when the CEO Tim Cook last time sold. It was in 2017 and he sold big chunk. And since then, no sales from the CEO, so which is kind of a very good news. Let's look at the earnings growth as well as the PE ratio. So in terms of stock performance, last 1 year, as we talked, is down roughly 30%, and for the 3 years, it is still up roughly 70%, and for the 5 years, Apple stock is up roughly 188%. And in terms of revenues, last 5 years, the revenues have been growing at 72%, and the earnings have been growing at 165%, mainly because Apple does so many stock buybacks, and Apple also started paying dividends. And these are the current earnings estimate for next year as well as in 2024. So if you look at current quarter, the earnings estimates are down 8% year over year. And for the next quarter ending in March 2023, the earnings to be down minus 1%. For the full fiscal year ending in September 2023, the earnings are just growing at 1%, the growth rate of 1%. And in 2024, the estimates are to grow the earnings by 8%. So Apple is not really growing at a faster pace. It's kind of slowing down in 2023, and then they expect it to pick it up in 2024. The next Apple earnings will be coming on January 26, 2023. Let's look at Apple ratios. So current PE is 21.58 and the forward PE is 21.32. And we saw that the earnings are just growing, it will be negative 1% next year. So that kind of reflects there. But the PEG is still pretty high, 1.71. So if we apply some ratios to the price, the forward PE of 21 today, the price is 126, and the typical bear market PE will be less than 20. It's almost 21 today, but ideally it should be 17. So for Apple to be trading at forward PE of 17, the price has to be around 102. Now, if we look at the PEG, as Apple is not really a growth company, its PEG of 1.71 is too high. And because of its affinity with the Wall Street and all the investors, even if it has to come down to 1.2, the price has to come down to 88. So that is typically a premium given to this big company. So in summary, if we were to look at bear market targets, whether it happens in 2023 or later in 2024, it's either 102 or 88. Hey, also I made some trading tips and trader mindset videos. I put the links in the description, also in the video here. Feel free to watch them every day before and during your trading to get inspired. Now let's look at Apple charts. This is the weekly chart of Apple. We have an all-time high at 182.94, and the green rectangle is the huge gap up we had in July of 2020. That is kind of my area of target for this downturn. We have a 38.2 retracement from all-time highs, which is at 113. That could be an immediate support. And then we also have that gap, and 50 to 61% is roughly around $88, which kind of coincides with our PEG ratio as well. So if we are looking at the momentum oscillator, it is still pointing down, but it hasn't reached its climax yet. And similarly, stochastics as well, it hasn't reached the climax yet. If you see on the left side of it, when we had similar stochastics in 2018, it came down further before it started going up. This is the daily chart for Apple. We can see some Fibonacci ratios very clearly here, and similar to the weekly chart, the daily chart momentum is also pointing down but hasn't reached down to the levels we had in May and June, after which we had a huge rally back. So I would expect a weakness continuing to go down. Maybe we find some support around 122 in the short term. And if we break 120 level, the 38.2% is at 113. And then obviously 100 will be a very psychological level. And if we break down below 100, I would expect the huge gap we had from 2020 to be filled around $91. And this is the 1 hour chart. It's for day traders only, because if you are using the daily charts and do a day trading, you may not get good results. So even in the hourly chart, the momentum oscillator is yet to break down and go down. Similar to stochastic, RSI hasn't reached a climax yet, similar to what we had earlier in June timeframe. So give it a few days to a week until it reaches its climax. And you can see the 100% retracement from September highs would be around 122, which could be a very short term support, and it can reach go back to 133 in the short term before it continuing the downward pressure. That's all I have. Thank you for watching my videos. Please subscribe, like, and share with your friends.